So if I were to ask you to pick two or three qualities that you look for in a founder, what would you say those are?
One is coachability. It takes a village across all aspects of the business, and being able to receive feedback, not just from advisors, peers, colleagues, but also from the market itself, right, is critical to success. Coachability then drives adaptability and then the opportunity to remain flexible. So I think coachability is very key to that, because I think foundationally as a founder, you need to be constant learner, constant student to not just others, but to the market itself and to your customers, right?
Hi, Alex. Welcome to the Open Metaverse podcast.
Hey, Mehdi. Thank you very much for having me. Glad to be here.
Alex, for our audience, can you tell a little bit about yourself and your crypto journey thus far?
Yeah, sure. So my my crypto journey started back in 2012 or so. I was first introduced to Bitcoin through my escapades of running a RuneScape bot farm in college. And so I was a prolific bot farmer and would sell my accounts to different entities around the world, and had some buyers buy my accounts through Bitcoin. And I didn't really, I think it was like $20 at the time. So it was like one Bitcoin per account type model. So that was like my first foray into the space. And I think it just became, it persisted kind of like that. And I didn't really take it very seriously until more so 2014. But I studied applied math in undergrad, and this is when this was all happening. And I was introduced to a lot of kind of core encryption primitives, right, that we all are familiar with today, from the SHA, 256 to Grosvenor basis, which serves as a very foundational primitive to zero knowledge tech, right? So I was introduced to all of these concepts in some of my classes and in my independent research through my degree. And so there was kind of this alignment, and as I read through the white paper, this growing interest from my perspective, as it aligns to my academic career. And then in 2014, Coinbase was a partner. Coinbase Commerce was a partner with Dell, and I was an intern at Dell as a BIOS engineer, platform engineer. And I remember when it was announced, and they were like, through Coinbase, we will start accepting Bitcoin to purchase our products. And I remember thinking, oh my God, I have a ton of this stuff. Wow, like this thing's going, enterprise. So let's buy some computers, let's buy some monitors. Anyway, so that was like this bubble in my mind of, crypto going mainstream. A decade later, here we are. So, but over the years, I stayed in Web 2, was a product manager, engineer at several different Web 2 companies, started my own digital health company. So really 0 to 1 operator, but kind of stayed within the crypto realms personally as an investor. And then in 2021 or so, I decided to go back to grad school to really review and understand a lot of the more technical side of crypto systems, distributed systems. So studied computer engineering, got my MBA from Cornell. And through that was very focused on going into crypto institutionally. So joined a few different funds as a venture partner. And then joined Shima about a year and a half now ago, end of 2021 and beginning of 2022, as the head of research and on the investment team. And Shima Capital is an early stage pre-seed seed fund, generalist fund that covers a number of different investments across different categories, from DeFi to infrastructure and non-gaming consumer, as well as gaming. I've really focused on more infrastructure and DeFi. And kind of agnostic to the stack, right? So application layer protocols down to the network layer. So we were very kind of focus on obviously supporting our portfolio companies, and my role as head of research is bifurcated between supporting our portfolio companies in a number of different ways to also supporting our investment theses in key categories.
Awesome, Alex. Amazing background. And since you mentioned that you cover infrastructure and DeFi, one of the topics that have lately been on top of my mind, and I guess a lot of crypto folks out there, has been restaking. So, how do you kind of see the space of restaking? What are some of your thoughts there? Do you think it's a winner take market? I'd love to get the complete download of how you're kind of viewing this vertical.
Yeah, sure. So yeah, restaking is an incredibly hot topic, and rightfully so. I think it's a very very powerful new paradigm. And why is that, right? Um, I'll try not to be an echo chamber because I know you had Sriram on the podcast and a lot of other great guests that also touch on this. But in my mind, just to kind of go through the overview and whatnot, restaking, right, is extending the trust guarantees um, provided by token economic security beyond the virtual machine to more applications, right? So middleware, AVS, active validator services. Traditionally, applications built the core logic in virtual machine as a smart contract, right? And so there are a lot of limitations, costs, features, inability to call external resources, dependency on middleware, right? I.e., oracles and bridges that are now introduced beyond the VM level. But that dependency creates a lot of risk because now you are dependent on the security guarantees associated to that middleware, right? Depending on if it's an oracle or if it's a bridge for assets. And so restaking is this idea where you're able to leverage the stake assets of the underlying network, right? To extend the tokenomic economic security of general staking to associated and proof of stake consensus to more complicated trust-based applications. And so now instead of an attack vector limited to say $10 million of a particular token, you now have the trust guarantee of the entire underlying network. And so this new paradigm has massive ramifications, right, across how middleware is built out, the social consensus associated to the semantics around validators supporting specific middleware and projects and applications, which I think is less talked about, but obviously gaining more traction given Vitalik's latest post with the risk associated to social consensus, and really the extensibility and composability around security has never kind of been visited before, and I think restaking introduces that. So that's kind of the overview. I mean, restaking has, we're very familiar with Eigenlayer and several other projects, Exocore, that are is addressing restaking in kind of their own form factor. But I just find that very similar to new primitives like AMMs, for instance, right, with Bancor's introduction of it, and then derivatives with Uniswap and its growth over the years. We are seeing a new paradigm associated to infrastructure development and addressing a very core pillar associated to blockchain tech, which is safety and security, particularly around assets. And as we are familiar with it, assets in the form of monetary value.
Yeah, so I'm going to double click on this for a moment. So in terms of the way I kind of think about the restaking evaluation is, we first started with Cosmos interchain staking, then we headed towards, let's say, Eigenlayer and Babylon chain, where you can basically take securities from other chains. Do you think the next step would be somehow trying to tap into the multi-chain world, where securities somehow, or at least the validators somehow across chains can be pulled in? Do you think that's the next direction we are heading towards? And relating to this, similar to liquid staking, do you think what happened with Lido, do you think this is sort of a winner take all market? Or do you think it's more like an oligopolistic structure where there'll be few big winners and then rest of them will be copy paste?
Yeah. So I absolutely believe in a cross-chain pooled security world. We are very we are strong believers, and personally am a strong believer in a cross-chain multi-chain thesis, and so why only stick to one chain and the idea of restaking when we have a universe of staked assets that we can leverage to enforce and enable security. Um, so with that model, right, we have this idea where you'd be able to leverage staked assets on one chain to support active validator services or middleware projects and Oracle's bridges on another in a very composable way. And so I think that I'm not sure what the numbers are today, as of today, but historically, the amount of staked assets on other chains, right, total
52%.
are
52%.
greater
Yeah. More than
than
yeah.
yes, thank you. 52% are greater than that of ETH. And so you're leaving 52% of staked assets on the table. And this goes, and this includes ETH, right? So it's not, I'm not excluding ETH in this equation here, where of all staked assets, there isn't this need to just stick to one. And it's not just ETH, right? Like if BNB, if there was an eigenlayer for BNB chain, for instance, there's this question of why isn't there an equivalent pooled security for Solana, or any proof of stake, right, chain. But then the next step is an aggregation layer, very similar to like a 1inch of pooled security, in which you're able to aggregate cross chain and route it to support everyone. So in all entities. So absolutely. We've been working on something like that actually. I don't know if I should release the alpha here on this podcast, but happy to. But yeah, we've been working on that idea because we're very bullish on the paradigms of restaking, as well as the cross chain and multi chain thesis. When it
So
comes,
Alex,
so your second question, because I don't want to ignore it. So winner take all. Yeah, so I think that there are risks that are currently kind of being discovered and are uncovered within this realm of being able to restake already restaked assets. There's also this idea where maybe the short-term sustainability associated to a restaked pooled security model is at risk, right? Because like for instance, the value capture of restaking might decrease over time because one of the core propositions related to restaking is the idea where this middleware entities no longer have to bootstrap their own security and launch their own token. But there is an incentive for these middleware solutions as they grow to eventually have their own token, right? For a number of reasons. And so does restaking then lose its viability over time? And then this then creates a smaller market for other players to come in. So I would argue that that's one area that you have to obviously take into consideration. But as I mentioned very briefly earlier, there is this idea of social consensus, right, associated to and this social semantics associated to restaking that goes beyond the technical security guarantees, which is very important. And so, but I don't see a world in which there's going to be a significant number, maybe an oligopoly, but most likely a monopoly of sorts when it comes to restaking, because if it becomes more saturated, then you essentially degrade the guarantees associated to the core proposition in the first place.
Yep, that's a fascinating thought. One thing I was looking at was Lido's market dominance, right? Like they have 75% of the market share at the moment. But initially, they were having issues. So I think the one barrier of entry here is trust, like user trusting their Ethereum with the external party. And I think that is the competitive advantage here because if you can't trust your Ethereum with someone else, it takes a lot of time to develop that trust. So for because of that reasoning, my rational conclusion was maybe we are heading towards a monopoly or a duopoly, something along those structure. Just because what we saw with Lido, that there is this affinity with your Ethereum that you do not want to kind of lose or experiment with.
Yeah, I can see that happening, and it's not just right within the stake narrative. I think there are multiple narratives that follow that. I would argue, even on the MEV side, right? With flashbots, for instance, in PBS, I think MEV boost accounts for 90% of block building.
Yeah, let's touch upon MEV. This is one of the areas I also wanted to pick your brains on. Like, how do you kind of see the MEV landscape? I think Shima also invested in Fastlane, which is a MEV protocol on Polygon. How do you kind of see the market structure across different blockchains? Like Solana has a different architecture, Ethereum has a different
Yep.
architecture. In the future, Sui has a different architecture. So, what's your take on this? And let's say when you do invest in MEV, like what's the thesis there? Is it like a proxy for getting a cheaper valuation for L1s? Like what's the thought process, a mental model when
Yeah.
when you guys invest in MEV?
Yeah. So MEV. Okay. So I'm going to take a step back very quickly. My positioning on MEV versus my as a consumer and as a participant of blockchain applications and networks is very different from the venture backability of MEV projects, both from the mitigation and the extraction side. So let's start with the overview, right? So MEV, I think, is MEV isn't going anywhere. It's an inherent characteristic of the design and just general operation of decentralized blockchain networks. It exists because it's financially lucrative, right, for participants to extract value from transaction ordering and manipulation, and that's just part of the underlying foundations associated to, as I mentioned, blockchain networks. And so, as long as there is an opportunity for profit through strategic transaction sequencing, market incentive will continue to drive right this pursuit of MEV, especially when the market participants involved with MEV play such a important role in like the sustainability of the network itself. And there's like this cat and mouse game, and it is this gamified, transaction semantic that is very powerful, that drives participation. MEV is considered kind of like this Millennium Prize problem, right? So in math, you have a Millennium Prize problems that I think it's like $1 million prize if it's solvable for blockchains and crypto, because there's this ebb and flow associated to the benefits and trade-offs associated with MEV. Now, toxic MEV is categorically different because from in the form of like front running, sandwich attacks, etc. That isn't necessarily MEV itself, because like I mentioned, MEV does have potential benefits. So, for instance, many DeFi projects rely on economically rational actors to ensure usefulness, stability of the protocol. And so like an arbitrage on a DEX really ensures that users get the best correct prices for their tokens, right? And lending protocols might rely on speedy liquidations when borrowers fall below collateralization ratios, right? And so without rational searchers, right, that seek to fix these economic inefficiencies and take advantage of these protocols' economic inefficiencies, then these DeFi protocols essentially are missing out on this opportunity cost. So I think that that's very important, and I think that is this MEV that I think is ideal. And I think that there are many, there is a project focused on transaction semantics, and which I can talk about in a bit. But this is a really great opportunity. I don't think MEV is going anywhere for that reason. But toxic MEV is a different thing. Now, when it comes to your question, I find this world of investing in MEV, both in the mitigation and extraction side, to be very complex and difficult to underwrite. So from an investment thesis perspective, we generally have not invested in many MEV projects. And so Fastlane is an exception. We want, we love the team. We think that there's a really unique opportunity with Polygon. So we have some exposure there, but more generally, it's been very difficult for us to develop conviction and crystallize the opportunity, especially from this venture backable mentality and mandate to alignment to our mandate of a thesis to back MEV projects. Now there is this tertiary world around PBS, right? Decentralized sequencers, and PBS enablement, but also transaction semantic improvement that we are very interested in. And so I think I think there are tertiary categories that we're very willing to invest in, because then it actually improves the overall infrastructure associated to blockchains beyond MEV. But specifically investing in MEV, for the aforementioned reasons, has been less of a priority.
I also want to zoom out and give a quick plug to some of our listeners who invest in NFTs and gaming. They might not realize that MEV also impacts it. So when I was doing research on MEV, I found out there's a reason why whitelist of NFTs happen. There's a reason why reveal happen after the minting process. And the underlying reason for that is MEV, because let's say if all of these things do not happen in a sequence, somebody can front run you and basically make either front run you or back run you and make money. So it does impact our lives, even though some of the NFT gamers might not realize this. But if you're living on blockchain, it definitely impacts in various ways.
Yeah, that's right. Sorry. So maybe I can clarify as well, right? So that's a really, really great point. As it stands now, transactions are both for transactions are smart contract messages, right? That do not have to be this Alice and Bob has this monetary contract and they're sending assets back and forth to each other. The signing and the engagement of games, NFTs, right, is a part of the semantics of transactions. As it stands now, transactions overall, right, as you mentioned, are falling prey to liquidations, slippage, right, stolen arbitrage, hijacked attacks, in the form of toxic MEV, and so there are two fundamental properties associated to transactions, which is atomicity and determinacy. With these two properties, it doesn't matter if it's you wanting to swap Ethereum for USDC on Uniswap. Those two properties persist across any type of transaction, including gaming and NFTs. So, good point to bring up, Mehdi. Thank you.
One thing that has been very hot lately, even though the interest rates are high, AI has been really, really hot. Some might even argue that it's going through its own hype cycle at the moment. So I also want to discuss, how do you see the intersection of AI and crypto? How do you kind of see convergence? I recently had Kyle Sumani on my podcast, and basically he was like, the only thing that matches at this intersection is decentralized compute. Given it's an interesting topic, I also want to know your thesis and your download on how you kind of view this intersection.
Yeah. Do we have a few hours? So the intersection is very unique, but I think it's very important for your listeners and everyone in the industry to be very pragmatic about that intersection. I think AI is one of those things that will be persistent in every industry, right? From banking to agriculture, every aspect of our lives will be impacted by AI, and I think most people will agree with that statement. And crypto is no different. And so if we were to talk about the, you know, AI to crypto intersection, that's inevitable, right? There's going to be enhancements to the assets that we create, right, in games through AI. It's going to impact the bots that we use, both for automation as well as for trading, for MEV, right? There's going to be massive ramifications of AI to crypto. But I think what most people within the space care about more is the other way, right? How does crypto play a role, or can crypto play a role in AI? And I would agree that decentralized compute is a very unique use case. I'll get to that in a moment. But at a very high level, I strongly believe that the relationship between crypto and AI sits in this relationship that we can kind of compare to with crypto, cybersecurity and the internet. So cybersecurity was a field of study that really grew and it has persisted, and it will be a continually like exponential growth vertical because of the internet, because of the Internet of Things, right? Distribution of devices and the importance of our digital world. Crypto has the opportunity to become the cybersecurity of AI in the sense that there are mechanisms that blockchains enable, such as data sovereignty, such as transparency, encryption methods that are tertiary to crypto, that allows for AI to be more self-regulated, right? And that's a very, very important point, because I think there's this fear of AI kind of taking off and having extreme negative ramifications associated to what it can do to our lives. And I think that blockchain is a mitigant to that, similar to how cybersecurity is a mitigant to many actions that we take in the digital world. So I think that and how it manifests is very opportunistic for the space. Specific examples, I think, we as an industry need to continue fleshing out, because as I mentioned, we need to be very pragmatic about what's actually possible with that mitigation. A lot of people talk about ZKML, and putting proofs on chain, or weights in architecture of models on chain, so that there's, model authenticity and model integrity. Well, to be completely frank, the assumptions associated to ZKML working, which I think is a fantastic use case for, this intersection of crypto being a safety and security regulator for AI, has very non-trivial assumptions, right? You need to assume that you're able to convert a model, architecture or weights into a polynomial that then can be converted into, a proof. And that is a very complex thing. And in order to simplify it, you might be at risk of, change in tweaking the model in ways that originally didn't need to be tweaked in order for it to fit into a polynomial, for instance. And so these non-trivial assumptions that many people are ignoring in light of what ZKML can enable, I would argue should not be ignored. And even though it is a very utopian type vision, we're still a few years, if not more, away from actualizing that. But this is all, I digress. This is all to say, I think that there is a very unique opportunity for crypto to play a role in safety and security with AI. And then with decentralized compute, which I would argue is another second great use case, is fascinating, right? Obviously, there is this pipeline of processes associated to AI, right? You have the training of the data, you have the computation associated to model generation, then you have the inference calls, and et cetera, et cetera. So on the compute side, we live in a very centralized compute world with many, key players, large key incumbents having significant market share. And so with the decentralized compute model, you break that wide open. And the only way to establish consensus, the only way to ensure this censorship resistant, decentralized, composable, immutable type approach is obviously through blockchain tech. So from the computation side, we have many projects that are addressing this in very unique ways. And this also, is happening not just with AI model generation, but also rendering, right? So, GPU graphics rendering. So Render Network is an example of that. Jensen on the AI side, and a lot of them achieve the same outcomes, right? Which is, how do we decentralize a massive amounts of compute that enables the stakeholders involved with that compute and opening it up for more stakeholders to scale properly, right? To then achieve this outcome of either AI or rendering or even ZK proof generation, right? On the hardware acceleration side. So I think that that's a really great use case. And then also kind of is, I think, a good segue into the DePIN narrative and decentralized hardware.
Alex,
narrative.
before we touch this, I want to double click on the compute part. So Render has been there since 2017, 18. Again, big fan. I've also, like in previous live, wrote an article about it. Why do you think it hasn't taken off? It has been few years. They have been able to establish a marketplace, a two-sided marketplace. Why do you reckon we are still struggling with this, even though the AI narrative might be fresh right now because of the metaverse narrative, the metaverse rendering and all of that stuff was like has been there for last couple of years. What do you think has been the bottleneck there in terms of these projects taking off? I know Render has been there since 2018. Akash was there, Golem, like during ICOs. What do you think is the main issues here? Like why some of these startups kind of have that issue in terms of scaling?
I think it's a mix of two things. I think one, there are technical limitations associated to syncing data and the actual compute across multiple, distributed networks. So this is like a peer-to-peer network limitation that many, this vision of peer-to-peer networking and distributed networking has existed for quite some time. But the technical limitations to ensuring that achieves the same level of parity to a centralized server approach just hasn't been able to keep up. Like that parity does not exist quite yet. That's one. So just pure technical execution. And this is very important because why would I sacrifice kind of the key component, right? That is important and a key feature that is important to the outcomes that I mentioned, right? Say like training an AI model at the sacrifice of decentralization. And I don't think that the value of decentralization and I'm not talking about, the Nakamoto coefficient. I'm talking about the value in a quantified form, right? Whether it's revenue, whether it's profitability of decentralization is very hard to calculate. And we haven't been able to do so. And so it's kind of like this, unicorns and this like rainbows and butterfly type mentality when it comes to decentralization. And it's like, we can't really attribute a number. Whereas with actual performance, actual scalability with centralized entities, it doesn't matter. Right. And so since there's a big question mark there, and I would say this goes for many things, even with restaking, for instance, question mark around quantifying the value of decentralization, it impacts the choices of adopting decentralized X, specifically compute, when you have to sacrifice the latency issues and general limitations associated with peer-to-peer networking that will never compete, or not never, but is has yet to compete with the centralized counterparts. So that's one. And then there's like this introduction of edge compute, which I think is also a nascent technology, but and localize. So the idea of edge compute, right, is bringing computation and data storage closer to the location where it's needed. That thesis will help enable the adoption of decentralized compute. But because it's also nascent, I see that this being very early. The second reason why I don't think adoption has really come to fruition with decentralized compute is token design. So I think the incentives associated, right? Because you're already, like I mentioned, you're already sacrificing performance, and so and general cost, right? So then, how are you able to mitigate that with the proper incentives for participants? Well, most token designs that I've seen in the space when it comes to decentralized compute are not conducive to driving acquisition of computational resources. And so I think that needs to be addressed, right? And I do not know what that may look like, but as it stands now, it just hasn't worked out. And so I think that those two core components, right? So as a recap, one, just general technical limitations and lack of parity to centralized incumbents, and then token design is why decentralized compute hasn't taken off.
Yeah, agreed on all of the above. Yeah, just one case in point regarding render. So with render, there's sink and faucet, but there's unlimited sink and unlimited faucet. There is no burn mechanics yet. And on top of
Yeah.
that, there's a SaaS model for priority compute. So when you have that kind of a conflict of interest where equity holders wants to make money and token holders also kind of want some value accrual, then you have that tussle that basically doesn't lead to either good price performance or adoption. Another interesting thing regarding render, just like a quick comment here for some of our folks that are interested in this, the valuation is actually like astronomically absurd. So when I was doing this calculation in terms of render used multiplied by the network value, so network value over here could be proxied by circulating supply out there, and what's the render use on an annual basis? It's trading at 720x. So it does have a unfair advantage relative to relative to newcomers in Web3, but still something I think latency, as you might highlighted, could have been an issue, and I think a major issue. Despite having this unfair advantage, they haven't been able to capture the market.
Yeah.
So definitely very, very fascinating. And I think now we can segue into DePIN, which is again very, very heavily focused on token designs and token.
Yes, absolutely. Yeah. Yeah. Not much comment on DePIN. I mean, what is, let's see, what does it stand for again? I think it's like decentralized.
I've seen multiple versions. I've seen
infrastructure.
DePIN. Yeah, I've seen DePIN as well. Yeah.
Yeah. So, so I guess we can classify it decentralized physical infrastructure networks. Yes. So back to the segue here, token design, I think, plays equal amount of importance. And there are many different categories within this, right? So physical infrastructure, I just think Internet of Things. Think about, your Helium network, networks of the world, and which you're able to leverage hardware, right, to extract or to ingest some data, and that data is immediately, ingested in a distributed manner, and then there are token incentives associated to accessing that data or leveraging that data for some use case. In Helium's case, it's bandwidth. You have Hive Mapper, right, which is distributed networking associated to images and street views, right? So there are different use cases associated how you can leverage hardware to then drive distributed data flows. I think that's very, very important. Like that is crucial, I think, to the growth of crypto. And I understand why, this is a narrative that many people are excited about. Very similar to crypto and AI, though, I think we have to address some. I'm always coming in and throwing a wet blanket on these narratives, but you have to understand a few things. Hardware is hard, right? Like building these distributed networks and these token models around hardware, even more difficult. And so the development of these, right, where it has the functionality associated to being associated to some decentralized or some blockchain network, requires your typical hardware supply chain. I think with Helium, there was like this massive backlog of being able to have enough Helium boxes, right, to distribute to people. This was peak like 2021, 2022. And I remember that was, they're experiencing the same supply chain issues that any hardware company has to go through. So I think that that's, something to take into consideration. And then two, I think, we don't want to beat a dead horse here, but the token models associated to DePIN networks, are kind of going through like the growing pains of gaming token design in my mind. And so like, no, I think that there needs to be a unique model associated to specifically, decentralized physical infrastructure that doesn't necessarily follow that of DeFi or follow that of, general middleware infrastructure projects that we see today. And, some could argue, like, is a token even needed, right? can't we access, some of these networks and the data associated to these networks with a stablecoin? Maybe. And you follow a SaaS model? Maybe. And so I think all of that, we're kind of going through an exploratory phase. But I just want to I want to reiterate to listeners here and viewers that this is the future. And why is this the future? Because when we think about, decentralization and centralization, the arguments associated with it, majority of our nodes are run on AWS. They're run, on centralized servers and whatnot. How really decentralized is the blockchain, as many fudders would like to point out in media. But even beyond that, right? When we think about data sovereignty and unique decentralized identity, which are all associated to this idea of DePIN in my mind, it's important for the data associated to information being collected, the data being collected by these hardware networks, to be immediately on chain versus having a copy in a centralized server somewhere and then getting put on chain through, an Oracle or something. And so immediate, direct source generation of decentralized data is a very, and will be a more powerful thing that many people don't realize today. But, for instance, healthcare data, right? Like if healthcare wearables is DePIN. And so, or falls under this category, right? So when you're ingesting, healthcare data from your Apple Watch or your Whoop or your Fitbit, and, they're storing the data in a centralized server, but then, you may be like, oh, I own this health data, so let's, throw it onto Ocean Protocol and into, IPFS as storage or something. Doesn't matter, right? There's a copy that exists out there in the centralized world. And so when you think about decentralized data from specifically real world assets, such as healthcare, the only way to fix this is through decentralized hardware or decentralized physical infrastructure. And I think that the future, when it comes to the digitization associated to our existence, DePIN will play an absolutely crucial role in that.
Alex, any project Shima might have invested in that you can disclose that is also kind of playing along this theme?
We've invested in kind of infrastructure associated to so Picnic is one. So Picnic is more decentralized compute. So after the fact, after the data has been ingested, for instance, but not like specifically DePIN investments. No, we haven't. I think that there are still a number of we're still a bit. I don't want to say too early because I think our role as venture capitalists is to back strong founders in early narratives. But it's been very difficult for us to develop and crystallize the opportunity associated to DePIN projects at this point in time. So we actually have I've been keeping tabs on DePIN, but there hasn't been a project that has been a good opportunity for us to participate in. But just to list some, right? So I mentioned HiveMapper, Helium, and a lot of these projects, have either been around for a while and there's still a lot in development. But then some new ones. So Nadix is one that comes to mind. Is tapping into to imaging, so very similar to HiveMapper. But imaging for autonomous vehicles, right? And like being able to generate that data.
Which one was that?
How it trains.
Was that demo?
Natix, Natix.
Cool. Yeah, and sympathy for these founders as well. Like, so they are trying to open up a marketplace without trying to set up a supply side. So that is a very difficult task, and they're also playing in a play field which is kind of nascent and God knows what will happen. So I think a lot of sympathy for them. Typically with marketplaces, we have the control of the supply side, and that's how you bootstrap. But in these types of network, it's kind of tough. So definitely sympathies with them, and I kind of agree there is timing risk, but intellectually it's very interesting.
Yeah.
So Alex, I know we aren't we still have a few minutes left, but I definitely wanted to pick your brain on this. The debate between modular architecture versus monolithic architecture when it comes to blockchain. So, which camp do you reside on? Uh, I know there is a big push now towards kind of seeing the world as completely modular and just having thousands of roll-ups or rollers as a service. What are your thoughts on this?
Yeah, I mm, so I believe a modular future is inevitable. But the modular versus monolithic debate, people love to treat it as binary. You know, but that's not the case. I believe in a very hybrid, and this isn't like an answer to get away from the question, but in practice, right? Like, I believe in this hybrid, monolithic modular infrastructure, very similar to kind of like, you have your Microsoft and Intel's versus just Apple, right? And then it's also this vertical integration, this idea of vertical integration for the space. So what really drives vertical integration, right? So if you look at a Tesla company that has done really well with vertically integrating, there are massive benefits associated to supply chain, right? They like to control, and focus on cost reduction, as focus on customer service and end user engagement, number of things. And these are important things to note because when you think about a company like Celestia, for instance, vertically integrating within the modular ecosystem, you don't necessarily have the same tangible benefits, right? Because, one, obviously different companies, but if you think about the benefits associated with vertically integrating, I would argue that there is potentially a future where you have multiple projects and organizations focused on one specific aspect of the blockchain stack instead of Celestia, which is doing both, I believe, the application execution as well as the consensus, right? And I'm sure they're going to introduce a few more things. But vertically integrating a modular offering is kind of like antagonistic in a way. And so I believe in a modular future where there will be a focus on specific elements of the stack. So like, an eigen DA, so separate DA projects only focus on data availability, and there's a market for that, and competition and drive for innovation. There's settlement, right? And so we obviously see that today with the different rollups and whatnot. The different the chains, and then when it comes to execution, right, you have your different rollups and whatnot. So, so I think that I believe in this now. The monolithic piece and why it's more of a hybrid is because the value accrual. So where does the value accrue in modular stacks? There's this huge roll up as a service narrative, right? And it's like, oh, we want to be able to create the next 1 million roll ups very easily, right? Any organization, any entity will have their own roll up. That's very powerful. But when it comes to the value accrual associated to those roll ups and the network, it all kind of trickles down, right, to the execution there. And that's why I'm thinking about there is this element of monolithic properties that even in a very modular world will persist because of the engagement associated to the execution layer kind of taking the value accrual. But I think it's more of this. I think there's more of this buildup associated to how modular enables that to be more efficient. But I think that skews more towards this modular thesis versus monolithic generally.
So I just want to dive into this just a bit more. So
Yeah.
would you say, let's say you have parallel execution with, let's say, Sui, Fuel, Aptos, Solana, and these L1s who have these parallel execution and can do a lot of TPS, there will be theoretically L2s being built on top of them, and within that stack there will be somebody that will be providing data availability. Is that the future you kind of envision? Like, do you think that will be something that can also happen?
Yes.
So
Crypto itself is modular, right? And I think that we need to tap into that opportunity space across all layers of the stack. So I would love to see monolithic chains adopting modular, like monolithic chain. How do I put this? All monolithic chains have the opportunity to be modular, right? And I think that future needs to exist.
So there's a narrative that gets pushed regarding composability. Do you think even with this type of architecture, you can still have best of both worlds? Like you can have your app specific rollups or generic rollups, but you can also have some sort of composability at the base layer? Or do you think the composability will become interoperability where there'll be communication between these rollups as well as the main chain? Like how would you envision composability in that type of architecture?
I think it's tough to say now. So the interoperable, yeah. So I think if I understand correctly, right, like the existence of this modular world requires interoperability. In my mind, or I mean, I don't see any other way, right? I mean, I think interoperability in the ability to be interoperable is a characteristic of a modular world, or else, when you not just from like the parts of the blockchain stack, right? Because then you can extract one and create create an optimized blockchain, for instance, across different use cases, but because you're able to package different pieces of the stack and create your own optimized chain, you're going to have many of those. And I don't see a world where there's going to be a lack. There's going to be fragmentation across those chains, because then it really defeats the purpose, right? Each chain should be its own modular component as well to the overarching ecosystem. Similar to the restaking thing, right? I don't see this value associated to staking one particular asset just for that particular network's security, right? It's all about accessing liquidity associated to others, and the liquidity then drives security. Similar to how in the modular world, it'll drive application development, security, and general scalability.
So, Alex, because of the time, I'll shift topics a bit more. I want to get into the philosophy of the investing and touch base on that. So, when you guys invest, like at Shima, in terms of early stage investing, what do you think is more critical, the market structure or the qualities of the founder? I know we touched upon this bit earlier as well regarding DePIN, but in terms of focus, what would you say has been Pareto optimal for Shima and yourself when you guys have been investing?
So market quality,
Structure,
is that what you said?
market structure, or the qualities of the founder. So in TLDR, focusing on the market more or focusing on the founder more. Let's say if you guys are debating on IC.
Oh yeah. So this is not just crypto, right? I would always make a bet on a bullish market with average founders than a dying market or a depressed market with really strong founders, right? Because that's what drives the opportunity associated with the project and company. Always, 100% of the
Excellent.
time.
Excellent. At least you're honest.
I think that's the principle of. I think. Oh no, I think that's the nature of general markets, right? Economic markets, macroeconomics, and supply demand, right? Associated how it impacts your company, and so. But that's not to say, right? Not a binary thing, though. Founder strength of founders, quality of founders is of absolute paramount. Can't be ignored. That's this is having to choose between one or the other is obviously very difficult. So I want to obviously caveat my answer with that. But if I had to pick one, the market for sure. Yep.
Let's say the market is good. In terms of your experience, let's say when you guys are evaluating founder, what are some of the build to optimal qualities that have consistently generated alpha? So if I were to ask you to pick 2 or 3 qualities that you look for in a founder, what would you say those are?
One is coachability. It takes a village across all aspects of the business, and being able to receive feedback, not just from advisors, peers, colleagues, but also from the market itself, right, is critical to success. Coachability then drives adaptability, and then the ability, the opportunity to remain flexible. So I think coachability is very key to that, because I think foundationally as a founder, you need to be constant learner, constant student to not just others, but to the market itself and to your customers, right? Another one I think many people touch upon is intestinal fortitude. And I say that especially in this market, because every day creates a new problem or new opportunities. And usually those opportunities and those consequences are not always positive. They're usually negative, right? Hacks on one day, social consensus issues on another day, developments in the tech that may render your roadmap obsolete. So how do you get up? How do you take it on the chin and continue fighting and building your company? It's very easy to give up, especially in a very dynamic market like crypto and Web3. And being able to sustain the cycles, being able to sustain the macro environment, regulation, being dealing with customers, dealing with technical risks, all of that. And so the intestinal fortitude, I think, is an association and is a metric associated to their ability to withstand the conflicts associated to building a company within the space. And then third, and notice how many of these are not hard skills, right? It's very important that the hard skills can be learned and hard skills can always be developed. But I think some of these more soft skills areas are absolutely critical. And then I think third for me is integrity. I think this is a pretty obvious one, but integrity, impacts every aspect of your life, particularly when you're running a company and the lives of many others within your company. And so I think that goes without saying. And for me, I think personally, that's a very important thing, because if you are able to act with professional integrity, you generally have positive serendipity on your side, generally. And obviously a number of other things. But I think that that's just important for me in terms of character development and people that I like to back.
Yeah, definitely appreciate your thoughts here, Alex. So regarding the second part, fortitude, like how do you go about measuring that? Like, are there any specific questions you ask? Like, how do you kind of measure that, or how do you kind of evaluate that fortitude?
So when I'm asking questions, I get a lot back from asking really stupid questions that I already know the answer to, right? To questions that really require them to think and be genuinely honest with me about. And I think just through that, you can kind of like start stacking up the data points associated to not just fortitude, but all three of them. But specifically around fortitude, I think, it's a very difficult thing to assess. But you ask about what keeps them up at night. I think this is a very common question. And how they answer that is like this spectrum between it keeps me up at night, but I'm not worried about it, and this is how I'm going to solve for it, versus just telling me what keeps them up at night, and what they're looking for in an investor. So I'll give you an example, right? Oh, like what keeps me up at night is fundraising. Let's just say, no, that's not a good example, but like, let's see, so this the slashing mechanisms associated to what we're building out. That keeps me up because, that's a very, big technical problem, new primitive, we need to address it and design it ourselves. And it's one of those things with, depending on how they answer, they'll either be very confident in knowing that this is a problem that they need to address, and if they don't, it completely eradicates their company. Or like this nervous, right, response of, oh yeah, we really need like helpful people, or we really need to do this, and like it's a major risk. I think like confidence in how they answer, and versus like the answer itself is all very indicative. We also do conduct personality tests, actually. So much more unique questions that are specifically tailored to highlight intentional fortitude and many other characteristics. So we created a unique test, grabbing from a lot of existing tests. So like personality U, I think, is one from like the Bridgewater Ray Dalio template. There's also a few others that escapes me off the top of my mind. So connecting those tests can provide interesting data points. Obviously, we have to be careful of the bias, right? Knowing that they are taking a test as part of a fundraising event, but I think those biases will be shown and validated, right, throughout the diligence process with questions. That's a really good question. I think it's definitely more art than science. And so I'm just trying to picture all the conversations that I've had that has resulted in a founder that has had strong intentional fortitude, but it's much more of a pattern recognition art, and being in the space, and I come from being a founder myself, so I think that also helps in terms
Definitely,
of assessment.
this was an incredible answer. Like, this was very fascinating. I thoroughly enjoyed this as well. So Alex, I promise I'm in the last segment of the podcast. This is
No
going
problem.
to be more fun.
Let's do it.
More fun,
Yeah.
And less intense, and more fun. So in terms of the rapid fire, my first question would be, if you were building something today, what would it be?
Okay. Rapid fire. I'll do my best to rapid fire, but this is very, very important. Okay, I'm going to give you two answers. One is I'm going to build something with Web3 principles and Web2 execution. Why do I say this? Because I know the entire industry talks about user experience, talks about security, talks about on-ramp, problems, talks about user adoption issues because of these, lack of good user experience in UI. That we talk about it, but we are 1% away, or like we've only covered the tip of the iceberg in terms of what we actually need to do to execute. Massive problem. And I don't care about adopting 1 billion users. I really don't. I don't care about the next million. I care about an incremental process of driving parity associated to blockchain applications with acute utility function associated to these applications that match up with our Web2 existing solutions. And so I'll stop there. But that is something that I want to build, is just anything with that ethos in mind. Web3 principles, right? You want to obviously tap into the Web3 rails and primitives and advantages, but Web2 execution of really acute product development, this insatiable attention to customers, and ignoring speculation that never exists in Web2 products associated to the monetary assets underlying your protocol. Okay. And then in terms of something tangible, probably like a middleware e-commerce solution. I think e-commerce is an industry that has really interesting use cases when it comes to crypto, but no one's really touching that space. So e-commerce enablement, something with this new standard 6551, ERC 6551, non-fungible token bound accounts. I actually have a project idea associated to this specifically, that maybe one day I will get to build out. But yeah, that's probably something. So I think token bound accounts, like NFTs, associated wallets, and identity, fascinating. Love that space. Think it's going to play a major role in the growth of the industry.
Yep, I definitely agree with 6551. Definitely experimenting with that as well. And you kind of see this organically happening in multiple chain. Like you see that happening with Ethereum, but Sui also has a very composable way of creating those NFTs. So I think there will be multiple interesting things coming
Yep.
from similar ideas. If I were to create a NFT wallet, I think one interesting idea would be a soulbound token owning everything. So I do not lose my NFT in the process of maybe doing some degen stuff.
Right.
So Alex, again, this is not financial advice. Nothing here is financial advice. Let's say I gave you $10 million. Maybe it's magic internet money. You got airdrop these $10 million to invest in liquid crypto market. What will you buy, or what, or it could be multiple purchases? But yeah, what will you buy?
Uh, Bitcoin and Ethereum. In terms of distribution, I'll take 80%. 80% of the 10 million into those two asset classes, to those assets. 1 million for a diverse portfolio of alts, and then another million for just straight memes, meme coins. Meme coins have been the most positive EV thing in like the last few months, right? So I can't ignore that. Uh, so yeah, that's probably how I distribute it. But Bitcoin, Ethereum, we didn't really talk about my my Bitcoin thesis and just the general opportunity of Bitcoin, but I think the elephant in the room with the industry is how do we tap into Bitcoin liquidity, ordinals. Obviously, like there's been these attempts with kind of evolving the Bitcoin ecosystem and community, which is fascinating to me. And obviously with regulation, that's top of mind, and the halving coming up in 2024, right, in which fees become fees and distribution of rewards to miners become reduced. How that impacts the incentives and how the infrastructure associated to Bitcoin will evolve is, I think, a really interesting opportunity. So, so just some more additional alpha there. But yeah, I think with with 10 million, yeah, Bitcoin, Ethereum, and then 2 million of alts and meme coins.
Excellent. I think you'll be the first guest we had that wanted me to like double tap on Bitcoin. Typically, the guests we usually have, it's like let's talk about Ethereum, Solana, other altcoins. But yeah, definitely BRC20 caught me off guard as well. And I think like sometimes when you're zoomed into the market so much in a particular vertical, like, you do miss out on opportunity. Funny story, my aunt, she invested in Pepe and she was early on and in BRC20, and she made way more
Wow.
money than than the
Well,
stuff I was
get your
doing.
on the show.
Yes, yes, definitely,
It's
definitely.
awesome.
So yeah, that was fascinating. So Alex, what is your pet peeve?
Oh, oh man. I think it's a I think my crypto pet peeve is um okay, the first thing that came to mind um was this attachment to monetary incentives. The human psyche that impacts us through greed and the association of money with everything associated with crypto. I still love building really just great products and companies myself. Um, and I would be remiss not to obviously highlight, the reason why I'm in this space, foundationally and fundamentally. Um, but I think that skew associated to, as a developer, there's this incentive to build out a protocol, within a much shorter time frame to, in terms of level of success, earn me, a quick buck versus building sustainable companies for greater impact is a very like significant psychological issue for the industry. Um, and so it's a major pet peeve for me because I think that has hindered our growth massively, 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 massively. So that I guess that's a big pet peeve of mine.
Yeah, just a follow up on this. Do you think in terms of web, like building process in web 2 and building process in web 3, the time duration should be similar? Because somehow there's a perception that web 3 companies, because of the cyclical nature, just build in like 2 years, 3 years, 4 years. Whilst if you see some of the VC structures in web 2, they're comfortable backing a company for 7 years, 10 years, maybe even more. So do you think Web3 products should take similar time, or do you think that the urgency the industry has is kind of justified?
Well, the urgency is derived from the opportunity to liquidate and exit, right, through a token. And if that's the reason why you're building fast, then yeah, that's a terrible reason. If the reason is because you're just a really strong team and you've been able to go to market and identify PMF very quickly, build as fast as you want, right? So I think the answer to your question is less so on what drives it, or is more it should be more focused on like what drives the speed, less versus whether it should actually be that fast. But yeah, I think generally, right, in order to build sound products with the proper product market fit, and people are like protocol market fit, doesn't matter. Will customers use your product that isn't driven by speculation? And I talk about speculation being its own form of product market fit, but it's not sustainable. As soon as demand goes down, and you then lose the supply associated to that speculation because of prices, right, and the price volatility, you no longer have PMF, right, because you essentially lose the demand. So even though speculation is a form of product market fit, it needs to come in a more sustainable form. That more sustainable form does take time, in my opinion, depending on the type of product that you build. Whether it needs to actually match Web 2 incumbents doesn't matter, in my opinion. But typically, historically, data points tell us that, yes, longer is more effective.
That's a very fascinating answer. Price speculation having its own like product market fit. I think
So
that's
100%
interesting.
is product market fit. Yeah. Our entire industry has achieved product market fit on speculation. Liquidity has entered the space because of speculation. Maybe not Bitcoin, foundationally, but all these tokens and wanting to airdrop farming and yield farming. It's access to these short-term non-sustainable opportunities, and sideways trading, right? I mean, now I'm just like fudding things, but I like I said, I think one of the first things I said, I'm going to be very pragmatic about kind of state that we're in. We've sat at less than $2 trillion in market cap, total market cap. 3 trillion we hit November 2021. I remember very vividly. I think it was like November 21st, 2021. And it was a great day, and we haven't even come close, right? I think we're at around $1 trillion today. It's slowing going up with the Bitcoin ETF news, but we've been at this state, and it's like that's a drop in the bucket. The liquidity coming in is not net new capital inflows, right? It's very back and forth. So what will drive that net positive inflow is not going to be speculation.
So, Alex, what was the last thing you searched on Google or ChatGPT?
Let's look. Fatzuki. So so to our listeners, Mehdi was shilling me on the new NFT that came out, Fatzuki, yesterday. So if you like Azukis and carbohydrates,
Yep, that
this
was
is
the
a
slogan.
project for you.
Yeah, that was the flow. Do your own research, not financial advice, but yeah. Alex, question I should have asked you but didn't in this podcast.
Oh, questions around and I kind of brought it up myself, but either questions around Bitcoin or questions around adoption. I think many people will give different answers to those questions, or specifically the second question. But like I've just gotten to this point now where there are no excuses, right? Like associated to thinking about increased adoption, not even adoption, but sentiment, right? You go on the street, I'm in New York, you go on the street and you mention NFTs, immediate disgust, immediate negativity. You mention crypto, immediate disgust, immediate negativity, right? Like, whether these individuals decide to partake, right, and then become adopters, we need to figure out a way to cross the chasm of sentiment before crossing the chasm of adoption, because we essentially screwed ourselves over in many different forms. But obviously, with the news of last year do not pertain to us, but media has skewed associated to crypto and obviously the FTX stuff and whatnot. It puts us a few feet below where we were before. So we got to get back to level ground in terms of sentiment. And how do you do that? So the question of how we do that is something that I think needs to be discussed more.
Awesome, Alex. Before we conclude, how can our audience follow you and learn more about you?
So you can follow the fund, Shima Capital, just twitter.com/Shima Capital, no spaces, in which we, will update kind of our investments, our theses, etc. You can follow me on Twitter as well, at Linfluence, LINFLUENCE. That is my last name is Lin, as you all know, as you can see. But yeah, so that's something that I picked up very, very early on in my internet time many years ago. Stuck with it. So Linfluence, and I'm Linfluence across Telegram, Twitter, and on Farcaster, I'm just Lin. So LIN. But Twitter is definitely the best way to stay in touch with me and what I'm thinking about.
Alex, before we conclude, do you have a Solana mobile phone by any chance?
I do not. I've refrained from purchasing one for a number of reasons, but I am very bullish on Solana's move with the mobile phone. And this goes back to insert timestamp, but
DePIN.
This goes back to our DePIN conversation and the importance of data origination. And I think the Solana mobile phone is one of the first major steps by a network to align with that thesis. So love kind of the direction that Solana is taking by releasing that phone and what will come of it. But I do not have one personally.
Again, thank you so much, Alex, for joining us. This was a very fascinating discussion. We touched a lot of remits, and this was amazing. I thoroughly enjoyed myself.
Mehdi, thank you for inviting me. This was a pleasure, and yeah, this has been super fun. Thank you for having me.
If you found value in this podcast and have feedback or suggestion for future topics, don't hesitate to share them in the comment section below. Whilst you're at it, don't forget to hit that like button and subscribe. It really does help with the YouTube algorithm. Furthermore, if you're interested in hearing from a specific guest, again, drop their names in the comments below or give me a shout out on Twitter by tagging them. It makes our job easier. Until we meet again, keep listening to Open Metaverse Podcast and keep learning.
This podcast is for information purposes only and should not be considered as financial advice. Any opinions provided in this podcast reflect the views of the speakers only.